Alright guys, I think it's pretty clear where I stand as far as when I think the MOASS is going to happen. And for those of you guys that don't know, that want to hear the logic behind it, that is what this video is for. But also at the same time, do I shorten my time frame? Is my time frame now longer considering what we have seen in the stock market, the worst market since 1939, the first year World War II actually started? So to put it into a little bit of context, almost the worst stock market in 100 years. And dollar for dollar, this is even a bigger drop in the NASDAQ than you've seen in 2008 and during the crash of 2020 when everyone thought the world was going to end. So let's put this move into a little bit of context. I do also want to briefly talk about what has been happening in the crypto markets, potentially who is behind that, what is happening, and how bad that could potentially get. So if you guys find value out of this video, hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. We are not live tonight, but we will be live coming Sunday night to talk about the futures and everything else for next week. So first things first, if you guys don't understand my logic of what I've been saying over the past 6 months, that's unfortunate, but it goes like this. Essentially, the reason why shorts have not been forced to cover, and the reason why a lot of big catalysts like a popcorn business, like an AMC branded credit card, like accepting crypto, so on and so forth. You guys get the idea that there's been a lot of catalysts that really have not done too much. Why is that? Because there has been a lot of liquidity. There has been too much money in the system, and what has been happening since the start of 2022, the worst market in almost 100 years, well, liquidity is drying up, and that's why you're seeing such big swings in the markets. Now, when you're thinking about a margin call and a margin call turning into shorts covering, you must understand that liquidity is the most important thing. That's why you only seen a small fraction of the shorts that actually covered during the June rally, because money was plentiful. Interest rates were very cheap. Why would you cover at the top and take a massive loss when you could borrow money for 2 to 3% and just wait for the stock to come back down? Because that's ultimately what happens every time. There's really never been a short squeeze besides AMC and GameStop that has went up and stayed up from its prior lows, and we're pretty close back to those lows, about $8 before that run up in June. But nonetheless, when you are in this market environment where bonds have had their worst start to a year in the history of the bond market, stock market worst start in almost 100 years, interest rates through the roof, and no signs of the Fed pivoting, no signs of this situation getting better, well, each and every single day you dry up more liquidity and you get closer to seeing margin calls, which turn into forced liquidations, which basically the difference between a margin call, you guys got to understand this. Margin calls does not mean shorts covering. Margin call means, hey, you have to put up X amount of dollars in your portfolio or put up X amount of collateral, which has gotten massive haircuts here in the last just 2 weeks or so because of this market volatility. So, you know, dollar for dollar collateral is not seen the same way as it was back in June, right? Let's say a treasury bond, when it drops 30% to start a year, the bank's not going to give you the flat rate for your collateral. They're probably going to discount that another 10 to 15%. But nonetheless, it makes it harder to service those margin calls. And then what you really need to see is some level of catalyst. Even a small catalyst in this kind of market environment can dramatically make stocks run up, especially when you're sitting at such low bullish activity. You have not seen a lot of bullish activity in the markets here in the last couple of weeks. I think that goes without saying, but when that eventually does come back, and as you can see, AMC, a lot of other stocks have had pretty impressive rallies, that can add together to become a really bad situation for the shorts. But you need to see a catalyst. We have the market liquidity in the toilets. That is here. I think we're primed for the MOASS in that sense. We don't yet have a catalyst. In my personal opinion, only my thoughts here. It could potentially be some form of dividend, which I'm not as confident on that, or it's going to be some kind of buyout. AMC is buying a stake in XYZ company. That could be a very big catalyst like we seen last time around. That's what made AMC run up about 200%. It would not surprise me to see another massive run based off of that. So those are my thoughts. And when you're thinking about the timing here, you're not really crunched for time, in the sense of liquidity will be low for a long time. So we have a lot of time to see this catalyst actually come to fruition, no matter what it is. You know, dividend, or it could be a multitude of different things. In my personal belief, I think really still by the end of summer, fall time, that's where you're going to have possibly peak low liquidity, right? That's where you're going to see a lot of companies, I believe, like Apple, your large companies that control the broad markets. They're really going to be hurting at that point. I think it's going to be very, very hard to comp 2021 earnings numbers, revenue, bottom line profits here in 2022. By the time you get to, you know, Q2, Q3, Q4, it's going to be pretty tough out there. And I think a lot of it has been discounted in the markets right now, but I'm still under the impression that earnings are going to be very, very bad, and they're going to be a problem. So that's going to continue to push the liquidity factor a little bit more. Say if you have a hedge fund with $1 billion of equities, meaning stocks or bonds, and they fall 30%, like kind of the situation we are in right now, the carnage is actually a lot worse under the surface. Well, then that same hedge fund has a $50 million short position in AMC. Well, if AMC even doubles from there, they lost 10% in their portfolios. Now, when they go to collateralize that other, say, $900 million of assets in their accounts, it's not going to be seen as the same because liquidity is so stretched. So I do think here summer, end of fall, that's still what we're looking at. We just need to see a catalyst at this point, and I don't know when that is going to come, but I want to be patient, and I do want to give it time here right now. Obviously, you know, AMC just had earnings. It was very well. We did see a bounce. We were sitting at $9.70 per share. Now we're at $11.81 per share. Came all the way up to about $13.60 at one point, and then had retraced down quite a bit. That was a very weird move. I don't know, you guys remember it, just like 2 days ago. GameStop got halted 3 times to the upside and then 1 time to the downside. These market makers, the exchanges, they're very quick right now to halt stocks because of the lower levels of liquidity. But unfortunately for them, when shit really does hit the fan, there's not much they can actually do besides halt it to the upside multiple times. So that is that. Now, what is happening in the crypto markets? I have not even really talked about that in this whole grand scope of the liquidity situation, but that's playing a big role in it as well, because who is the largest buyer of crypto? It is institutional investors. And what can they also put up as collateral for these short positions? Well, it would be crypto. And crypto markets were really not doing so good, but then you had the Terra Luna situation, and that was a flat out rug pull. There's no other way to put it there. That was some level of rug pull, and I think your one bad situation, stable coin going under, from seeing really a meltdown in the crypto market. So I would be pretty safe here, I guess, when a coin that backs a stable coin goes from 116 as of April 5th all the way down to 1/3 of 1 penny here today, or 1/30th of 1 penny. I'm not even sure, there's too many zeros there to know for sure. You got to be a little bit skeptical, and I think that's going to be something that is on the back end of all of this that is really going to be a very bullish thing for us. And I do think Citadel, somebody else was involved in this, and potentially why we have seen so much volatility in the equity markets, just up and down. Crypto does hold a lot of value. As you can see, Bitcoin's market cap still after this drop is about $557 billion. And even over the past 7 days, Bitcoin's down about 18.3%, Ethereum down 25.15%, and pretty much everything is still down quite dramatically. So that is that. I also can't time when, you know, some kind of liquidity event is going to happen, but I will tell you right now, if Tether goes under, Tether has been teetering under $1 for a couple days now, but we did see a bit of a flash crash. I believe it was 2 nights ago. Yeah, this was May 12th, where it did hit 95 cents per coin. There's something going on in the crypto markets. It's very hard to put your finger on it, but if Tether goes down, then I mean Bitcoin could fall to $2,000, potentially less than that, and that's going to put more pressure than you would even realize on equity markets as well. And I think that's kind of a gray swan or a black swan kind of event when inevitably that does happen, because I think somebody is scarce for money right now, and they are definitely liquidating a lot out of crypto. Now, nonetheless, the fear and greed index is still at 12, so we are still more fearful now than we were last week, even considering the almost 4% bounce we've seen in the NASDAQ and the 2.39% bounce in the S&P, over 3% bounce in the Russell 2000. Good news is we did close over 400 on the S&P 500, so it looks like we could have a little bit more stability heading into the future, but it's still going to be very, very volatile. And even when you see volatility like this, you know, collateral is not seen as the same quality, right? Comparatively to when the S&P bounced off of its 50-day moving average about like 12 times in 2021 and never really broke under that. There was a certain level of reliability with that. Well, now you're in no man's land. So it'll be interesting to see exactly what happens. Let's briefly go over the AMC Ortex data and then go ahead and wrap up this video. Those are basically my thoughts on when I think this is going to happen. I'm not changing my time frame. Situation is honestly getting more bullish by the day. When equity values go down, AMC will go down as well, but it puts a lot more pressure on hedge funds and institutions when a big catalyst does eventually come out. Not saying it'll come out on Monday or next month, but eventually we will get another big catalyst that will make AMC stock run. Just think about what happened on was it Friday? Was it Friday when GameStop got halted 3 times and AMC was up 30%? That was off of no news. So just imagine what happens when there actually is news, when there actually is some level of good catalyst. But nonetheless, the option activity was 21 orders totaling $1.78 million, positive order value of 96%. Lots of call activity coming in for July, September, May 27th, another June expiration, $10 expiration. Yesterday, they actually lost money on that. They paid a lot for that. Lost about $106,000, so that must suck. But lots of put activity coming in for May, June, September, and July. So it looks like a lot of people are trying to assume this is the bottom, but Apple is going to basically dictate the market's trade because they're 13% of the NASDAQ, 7% of the S&P. You got to have Apple playing along. If you don't, you're not going to get that bounce. But cost to borrow, max numbers are going up at 6.56%. Cost to borrow average of 4.17%. Short interest of free float, 21.66%. Utilization of 100% and days to cover sitting at 3.12. So believe it or not, through all of this volatility from going under 10 to now almost $12, you have not seen shorts covering. I think a lot of it was actually institutions selling out of puts on AMC, and that allows the market makers to actually go out and buy the stock on the open market. So those are my thoughts. Leave your thoughts down below in the comment section if you guys want to come trade with me live in real time. Link down below in the pinned comment to do so for that one. Make sure to get yourself those free stocks with Webull, Moomoo, and Public. Not a bad time to get yourself some free money and go ahead and buy the dip with some free money. Can never go wrong with that. So that's it. You guys enjoy the rest of your weekend, and I will see you in the next one.